Hello, I'm Nick Quinn and welcome to the ForexSignals.com weekly market preview for Monday, September the 5th, 2022. It is the first week of September trade, the fall season is rapidly approaching and it's time for the liquidity providers to return back to the office. So let's take a quick look round at the key events and a few markets to watch for the coming week in finance. So let's have a quick look around the markets themselves after the Australian retail sales. We've got a focus today, pretty much Monday, on the UK Conservative Party leadership contest. That is going to come to a close today and will potentially create some sort of volatility on the pound. Now, the pound, of course, has been absolutely battered over the past few months, and it's very hard to see a huge amount of upside for the pound. We are sitting right now just around these levels of the COVID-19 pandemic lows from 2020. That puts us at around about the 114s, as you can see, demarcated by this zone here. We're just into that at the moment today. So any more bearish news for the pound will sink us right down below there, and I can't see how that's now not going to potentially open up some kind of a downward move down to the 110 area. It certainly opens up the potential of that anyway. But you know, sometimes you can find with markets that political changes, big policy changes, can act as pivot points in currencies, and Liz Truss and Rishi Sunak are positioned very, very differently. So if Liz Truss does become the Prime Minister at lunchtime, it is potential we could see some upside in the pound. But from an intraday perspective, you are definitely looking at Friday's NFP highs of 115.88 as being the next area to aim for. Moving on to Tuesday, it's all going to be about the RBA. Labor Day will be over. Everything will be back to normal. All the liquidity is going to be returning to the market this week, and the Australian dollar is going to be the first one to experience what that is like. Now, we are expecting an increase from the RBA for a 50 basis point increase to 2.35. Now, we are now sitting very much now on an area in the Australian dollar I've had demarcated on my charts for a good while now, and that's this 67s zone. We're sitting right on top of it, and as you can see, I wrote on my chart there a while ago that that's the area we need to hold for the bulls. I still believe that. You know, if we do not get that bullish move, if we do not hold this area, the last few days we have non-farm payroll certainly couldn't get below it, but if we don't hold that now, I think we will go straight down to the lows of the 14th of July, and then it will be lower from there. But my personal preference is look for some kind of look for the bulls to hold this area, and then some kind of a move back up into this leg towards the 71s, something like that. When it comes to Wednesday, we have a lot of focus around central bankers, and given how hawkish the Federal Reserve has been, Andrew Bailey from the Bank of England is coming out to speak on Wednesday, and it will be very interesting to see how much he aligns himself with the Federal Reserve in terms of hawkishness, especially given that the Bank of England is kind of been lagging behind a lot of the other key central banks. But what also is brought into focus is an interest rate decision from the RBC on Wednesday, and the Canadian dollar is an interesting one. It's one that I have definitely got an interest in. We are now, really deeply pushing into this resistance area from 2020, from August 2020 on the weekly time frame, demarcated by this blue zone here. We've had two very, very strong attempts to get through it. An RBC decision there could mean that could be the push that we need to get over the 132.59 area. But that, for me, is definitely the level to watch. That is the key area. If we don't get that kind of a move sustained with a daily close above there, I can't see how we're not going to rotate back lower now for the Canadian dollar. And finally, that brings us to Thursday, which is the biggest draw of the week. It is the ECB, and that's going to bring euro dollar into focus. And again, that has been pretty battered over the past few months, given the energy crisis and the Italian debt yields, the difference between German borrowing costs and Italian borrowing costs. All of that uncertainty has not played well on the euro against the dollar. We do currently sit within a massive monthly support zone from 2021, which was untested, and we have now started started to just prod some of those Fibonacci levels in there. So depending on how hawkish the ECB plan to be, we know currently the market is expecting 50 basis points to 1% exactly, but they could go a little bit more than that. I certainly see that the general outlook for the euro is to look for further downside. But one area that I have got my eye on now is that close from the Friday just gone, that NFP close here around about those mid 99s. That's really important, that simply because it is our first area of technical resistance once we get over last Thursday's low, but also it was the close of the week, and it was also the close of the day as well, the daily close. So we should be expecting something from that, and I would say that we need to get well above there to then get back over back up to parity. I don't particularly see parity itself as being much of a barrier now. We've been through it several times, so that is less of a focus for the euro. And then moving into Friday itself, there's actually very little for Friday itself. There's just some Canadian unemployment data. Really, that's really the biggest thing for Friday. So generally, I would say that the majority of your week should be Monday to Thursday. So of course, if you want to get access to our report, all you need to do is scroll down to the bottom of the homepage on our website, and you can see right at the bottom here, you can get just click on that link there, Forex Forecast, and you can get full access to all the details of the report. So that is your weekly roundup. The fall is in the air, and so is the opportunity. Liquidity providers will be back in force from the beginning of Tuesday. Also, the world's central bankers are going to be key market drivers this week, led by the RBA, the Bank of England, and the ECB. Make no mistake, it is a great time to be in the market, so buckle up in the coming month. We're likely to see more action than in the past 2 months combined. See you next week.